Are we back once again? Okay, so T-Levels have been doing some upgrades to their indicators, so pretty nice. So right now, T-Levels has Conviction Sticks and Conviction Sticks 2. The names don't matter because it's all about how they work, right? So definitely liking this Conviction Sticks 2. The way it works, I'm going to show you the difference here. Okay, so we'll take that one off. So Conviction Stick was basically just this EMA cloud, and it would color the candle for you, which is really nice. Okay, you don't have to have it colored for you. I mean, you can already have a Heiken Ashi, which is basically just the moving average as well. But having this kind of color it to the trend of the EMA is really, really helpful. So what they did was basically got rid of that. Okay, added on some longer term EMAs, but then got rid of the little band here, so you can kind of see what I mean. So both of them really nice. I've been really liking this version 2 because it's just cleaner looking. So there's that. Number 2 is with the T-Levels. You can adjust this based on your time frame in a sense, and you can basically look at past ranges and that kind of thing. So let's look at basically yesterday's trading range. It stays here, man. It trades this middle line here, which is basically just yesterday's close. It stays there a lot, and then there's this gray box, one level up, one level down, and it's sort of just like this chop zone. So I like to play this where once it sort of breaks out of the chop zone, you can basically get a bearish bias. A lot of times you got to understand where the market is, but a lot of times it's better to actually wait for a bullish divergence or something to set up, sort of like what happened here, before you get in, because the plays to the downside usually are cut short. But that's just for you to develop over time. Those kind of feelers for the market. It doesn't look like it could really break this 41.52. Then it tried to make an attempt to 41.41. It just couldn't. And then it basically released the crack into the upside. So, but yeah, using the T-Levels are really nice. You can set it to daily levels. So it just extends the range out a little bit. You can set it to current level, which is what I do. I don't need to see the previous days. So I just like a nice, easy, clean chart. And you don't have to have these exhaustion levels on there either. So pretty customizable there. And then I also throw this thing on here just because I like the trend indication of the EMA bands. So that's really nice. So then I got the color coding of the candles. I got the longer term EMAs, and then I've got the EMA bands sort of just giving me an idea of the trend. And then I got my levels here, which are automatically generated there for me. And then you got the gray zone. Okay, so the gray zone is going to give you buying and selling pressure. And you don't need the elite oscillator on there. I just use that just for testing right now, and it works pretty good, by the way. But I've just been messing around with it. And then you've got your breadth indicators here, right there. So advanced decline, and then you've got your volume, essentially your volume ratios here between SPX and Q. Okay, so basically you got everything you need with one company here. You got your levels automatically generated. You've got your EMA trend bands, which you could get for free anywhere, but you got those that come with it, and then you've got basically your net buying, selling, and your breadth. Not much more you would need in order to pass an eval or something like that. This would do the trick for you if you learn how to use it. So hopefully you do. And if you want to test this out, I think there's a free trial still in the link in the description for 7 days. Go try it out for yourself and let me know what you think in the comments. And we'll see you next time. Peace.